Hello, Maverick traders. Welcome out to your market roundup for June 9th. Corey here with you. As always, we're going to take you through meaningful news in the markets. We're going to talk about why things are heating up or cooling off, and then highlight our very best trade ideas, be that bullish, bearish, or neutral. We're going to have some candidates.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
So markets continue with this risk-on environment. People are putting money to risk. They're saying, I think markets are going higher. I'm going to keep piling into stocks, whether that's a short-term momentum thing or longer-term breakout to new all-time highs remains to be seen. But right now, the markets are still in a good place. Dow, S&P, NASDAQ, all relatively flat, but up a little bit. The Russell 2000, the outperformer, up just shy of 1%. Oil with a nice day, up 1.2. On the daily news, we had Apple launching a new operating system. They're in the midst of their worldwide developer conference, and it used to be as Apple goes, so goes the S&P. Not quite as much anymore. China and the U.S. to meet in London to continue to hammer out trade details and tariffs and all of those sorts. Certainly the market seems to be positioning for more good news. Advanced decline line, about 70% of stocks up today and 77% of stocks above their 50 MA. So as you look at a chart of the S&P, we continue in this upward trend, and this is truly a bearish to bullish reversal in the trend that has transpired over the past few months. We hit an extreme low and we've just carried higher. We had a 2050 crossover, the dips have been bought, and recently we've just pushed to new short-term highs. We're not at new all-time highs just yet, but the march continues on. Now, if we look at the VIX is considered a fear gauge, and it really tells us how much does insurance cost if I wanted to buy protective puts and so forth. Well, the fear gauge says there is no fear. The fear gauge says we're going to march on. Now, you might think, well, this is, the probable turn just because we're low in price. It's not really how the market works. The VIX, when it's downward trending, it can go that way for months on end. So you never really want to buy it while it's in its decline. In fact, you really want to be buying it more when it's breaking out. Or, if you're going to jump on the fear gauge, you want to be trading it more in the surges and in the periods of chaos, and then just let those months and months where it's grinding lower and the S&P is just grinding higher, just let it do its thing. Now, I would say, however, as we look at markets, the recovery is not completely widespread, but most sectors have participated. There have been stocks that have had their own issues. If you take something like Tesla, well, that's a little bit of a coin flip. What are going to be the latest tweets out of President Trump and Elon Musk and the fighting back and forth? So there are things that have maybe not participated as much as the rest, but for the most part, all of these sectors are well represented on the upside. Today was absolutely bright green for the semiconductor space. Semiconductors were sharply higher. Again, part of that worldwide developer conference, Apple news, etc. So we're in this risk-on environment. The trend continues higher. Let's look at some candidates. Now we've got a list of possible bulls, possible bears. Let's look at a few charts, see if anything's ready right here, right now. If you look at something like CCJ, just broke out after a consolidation. Even though it's up a lot today, these things can get carried away to the upside. So certainly wouldn't want to short it. If I'm doing anything, I'd be long, but we might feel a little bit behind. But notice how that chart looks a little similar to JPM. Now, JPM is not the high beta stock that CCJ is. It probably won't have as much momentum on a breakout, but the same style of breakout could occur on the upside. Nice high basing, kind of ascending triangular pattern up here at the highs. JPM might be on the cusp of a breakout. Both are certainly more bullish candidates, and the trend persists. If we look at a couple of bearish charts, EIX has taken out the lows on volume. This is one that might chop around a little bit and then have a new surge to the downside, but certainly bearish. One that hasn't broken yet, KHC. So I wanted to have an example of some breaks today and some examples of consolidations that have not broken yet, but very well might be on the cusp of that. KHC, Kraft Heinz, is kind of an interesting company to study, where two major brands merged, Kraft Company and Heinz Company. And usually when you look at companies coming together, it actually, I guess I'll redraw this. Those two formed a bigger conglomerate, and that's usually a frowny face. Actually, some of the biggest mergers between big corporations have been some of the most spectacular failures. AOL, Time Warner back in the day, and so on. What's actually more bullish for stocks is when companies break apart, when they go their separate ways. So if imagine Google was to break into three companies, and YouTube was its own, and this was, the search engine was its own, that would actually be primarily more bullish, historically speaking. eBay, PayPal, that was a famous breaking apart of two big corporations, and they've done way better performance-wise since the breakup. So historically, big companies merging together, more bearish for that asset. A big company breaking apart, what they call spin-offs, more bullish as a historical basis. So I'm not suggesting KHC is on the cusp of anything. It's still together. It's still a big behemoth. Perhaps more of a bearish candidate and lower lows coming. So the uptrend persists in markets. We may be on the cusp of new all-time highs. We're certainly not far off from that. We've got CPI data on Wednesday. The inflation gauge, well, the goal of the Fed is around 2%, and inflation has been around that level for the last little while. But inflation's one of those things where once you have a big inflation burst, even if future inflation goes back to 2, you don't get that price reduction. It's not like prices are going down. They're just not going up at as fast a rate as they were before when the inflation rate was 8%, right? They're still going higher though. Things tend to get more and more expensive. Your dollar buys fewer goods and services long term. Inflation is a bandit that we really don't see. It all happens kind of in the dark. But over time, just understand your purchasing power is constantly being reduced and eroded away. Earnings tomorrow, we've got GameStop, GitLab, PLAY, Stitch Fix. Those are all reporting tomorrow. There's others reporting this week. Hope you enjoyed today's market roundup. Have a great week, and we will see you next time.